Let's talk some Tesla, though, because there's no shortage of information. The news flow keeps coming. Jenny Horne hosts the Next Gen with us. So this is fascinating because they're talking about this Supercharger network, but then they just let go of the guy who was running the Supercharger business.
They did. And so, yeah, we just saw that. I mean, the woman that was running its business, I believe, is Rebecca. I'm not sure how to pronounce her last name, but yes, she has been let go. And I also have a 4-day history lesson because today, at least, we're pacing to open the first time higher in 4 days for Tesla. So that would be seen as a win. So, I mean, hey, I think relatively low bar. Tesla did announce these plans, or Elon Musk specifically announced these plans via X on yesterday, I believe, saying that they're going to invest about $500 million in expanding their Supercharger network this year. Yeah, coming on the wake of the fact that while they're still expecting the Supercharger network to grow, it's going to be at a slower pace, and the department of their head is also kind of an interesting time in this situation. Although $500 million is no small amount. And hey, Elon Musk did say that they're not going to count their overall, this is just on sites and expansions, not counting operating costs, which are going to be much higher. But I think that right now we are looking for, again, like it feels like we're pre-earnings where we're like, hey, what is the next catalyst? What's the next reason to get people excited again? It hasn't been the case. And I know I was arguing yesterday that the layoffs, I think, are a bit like overblown in the way that it's portrayed by these headlines. But it's not exactly good sentiment. I mean, and even I can admit that, of course, when you lay off 40,000 employees, that is not good sentiment for a company. And I think that you see more and more of these posts on LinkedIn, and it's like, oof, it just doesn't paint a good PR picture for them.
Yeah, $500 million, especially at a time where companies have been really harshly judged for their spending. And there's been a little bit of a glut for EVs. Partly because of some of the charging infrastructure. I feel like you could take either way, either side of this. You could go, all right, you need to build out the infrastructure. It's worth every penny to spend because that's what will get more people buying EVs. But at the same time, if the market's been very stringent about what companies are spending, it might be a short-term kind of hit to the stock. But I guess right now, it's okay.
I know that the bullish narrative has been so much focused around like the robo-taxis, FSD, autonomy was mentioned like 1,000 times. I actually think that they're charging the overall infrastructure is a little bit more interesting, at least near term.
Well, I think big term too.
Yeah.
Right? Because isn't the reason why they're having trouble selling a lot of these things is because people go, well, I've got limitations outside the city.
I think that there's a huge like psychological barrier where like if you don't live in a place, where you have like ease of access, that people say, well, I won't be able to people don't trust it yet. And I think that's something also there's a major like industry, I'd say, overhang with that. It's not Tesla specific at all, but you have to have the mainstream consumer be able to say, I trust that I can charge my EV anywhere. Now, Tesla is known for building out this North American charging standard. I think it's interesting. Installations are up about 19% this year through at least the end of March, but this is 4 times as many. They have currently 4 times as many pieces of equipment as the next nearest charging provider. So they're dominating, and we don't even talk about that part of their business that's going to ramp up in the end of this year into 25.
We saw Blink charging earnings last night, and the initial response was to just murder that stock because the numbers are so bad. Other news in this category, though, as far as China competition goes, going to be difficult for them to sell their cars here.
It is going to be difficult for them to sell their cars here. Yeah, and I mean, I think everything with China is significant, yes, and I think that is something that has unfortunately weighed all of the growth expectations, but I'm not really exactly sure how it's specific to Tesla. I just feel like that's something that we've seen with any company that has Tesla or China exposure right now is still feeling the pain from that.
We're going to get a little help because we're going to slap them with some tariffs. So at least Tesla won't have to worry about any Chinese E.V.s coming home to battle, at least right now. But in China, still, it's a problem for Tesla. All right, we'll see how Tesla trades today. Thank you, Jenny. Appreciate it.